Alright guys, so in this video I'm going to go ahead and be explaining how I usually trade supply and demand zones. Hopefully by now you've seen the other video and you have a basic idea of how I like to draw both supply and demand zones. If you're still having some issues with that, you'll see me mark out some zones in this chart. I will be showing you how I usually take a long or a short position when price enters these zones, how to trade around them, and what happens when these zones are broken, and if you can play these breaks to the upside or the downside depending on from which direction price is going. So let's just go ahead and get started on the NASDAQ. I feel the NASDAQ has had a really good, it is a good example of how I've played these zones, especially on the supply side. So we'll just go ahead and start by doing some simple technical analysis on it, okay? So right off the bat, I am on the monthly, and that's just simply because I want to see what the overall pattern of this chart is. So just by looking at it, I can see that we are in a channel, okay? And let me just go ahead and put this here, okay? So this is this is a monthly, okay? Now I'm going to work my way down. And I'll also be answering several questions that some of you guys had regarding the difference, some questions regarding supply and demand, support and resistance, and other miscellaneous questions. So I'm just going to go ahead and start off by drawing supply and demand zones that I see, okay? And we'll be working from the time frame between 11/19 to till now, okay? So right off the bat, I see this right here, a daily. Let's see if we find anything else. Okay, we can use this here. All right. Okay, and I will show you. Yeah, this is a good example. All right, and even though price has crossed this 4-hour, I am drawing it, I'm extending it across just to show you how I would usually play a price break in one of these zones, okay? What else is there? This is a rough 4-hour. And I'm not going to mark out all of the ones I see. I'm just going to mark out the ones that give a good visualization of when to go long, when to go short, okay guys? Because I see a lot that I am missing, but this is just for you guys so you guys can see how I would play these prices, okay? Let me just see if there's anything else. Alright. That's okay. And notice how I am working my way down in time. That's what you want to do. You want to start from the biggest time frame that you can, that you're comfortable with, and then just work your way down, okay? Alright. Alright, okay, so we'll go ahead and get started with this 4-hour supply that we found here, okay? Alright, so, oh, and also one important, really important thing here. So okay, all right. So it was during early October that we started taking this, or actually, yeah, or like from August to mid-October, or actually the beginning of October, that we started taking this big dump once price had hit this top resistance on this channel. We started going down, 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 and then this is when the Nasdaq and SPY both made huge rallies to the upside, and it was around this time, mid-November, that we started kind of just moving sideways. We couldn't go any further. During this time, we basically had a rally base drop formation happen in the long term. I don't know if you can see it, so I think it would be better if we do it on the daily. Yeah. So we have rally, base, and drop, and if you remember from my previous videos, that's one of the formations in price in which we get supply, and it was during these times from November 19th to the 17th where we were stuck in a big range from around 400 to 379. Okay, like around over here, and it was also during this time where price in the Nasdaq had failed to get above 400, and even before this, prior to this action right here. Let me see. Oops, sorry. Oh, I had it there. Is it this one? Yeah. Okay. Yeah. So right here, I don't think I was able to find any. Well, besides this one, well, that one got broken a little bit, but I don't think I saw any. This one can count too, right here. I just marked that. Oops. Just extend it to the right. Okay. Alright, so it was during this time where we had a bunch of overhead supply, and we were stuck in this big range. So what happened here was every time price would approach the key level 400, and then this overhead 1 hour supply, and then eventually 4 hour supply, price would just simply bounce in the opposite direction. And there were several instances, like for example here, here, where had you taken a short position or played puts to the downside, you would have made easy money. And I just want to show you guys how I played some of those plays. So let me just go ahead and pull this up right here. Let me just show you guys. Okay, so right here, this is a supply zone. I'm just going to mark it with an S. As we know by now, whenever price approaches the supply zone, if the supply zone is strong and reactive and there are sellers here, price is going to get pushed in the opposite direction, okay? When price manages to actually embed itself into the supply zone, and it takes a little bit of time for sellers to react, price will go down. And what you want to see when you're trying to take a short position or play puts in a supply zone is you want to see price lose strength. So right here you have this initial rally of buyers pushing price into the supply zone. You make a high here, okay, a short-term high. Then price goes down, buyers try again. And this time they're only able to make it this far. And then the next time they barely push it up to here. So what you want to see when you want to take a short position in a supply zone is you want to see higher lows. Okay? because this to me indicates that this supply zone is working, as in whenever these buyers push price in here, these sell orders are getting filled and buyers are dying off in strength. Every time they attempt a new push, it's just fading in strength, and you're getting this to me is confirmation that price is going to reject the supply zone and eventually bounce off. Bounce off how much? There may be a demand zone to the bottom, and that may be like your price target. There may be support levels or key levels, whole numbers, psychological numbers. That may be your price target whenever price bounces off these supply zones, okay? So ideally, what you want to see when taking a short position in these supply zones are higher lows. Also, you may ask, okay, yeah, we have these higher lows, but when should I take, like, which price should my entry be? Oftentimes, these supply and demand zones, they coincide with support and resistance. Demand zones are most likely to coincide with support, supply zones with resistance. So what you want to see is you may want to look for whole numbers, like I said, whole numbers, psychological numbers, or just previous price action, like in the past, where price just rejected off of a certain level, and that may be, and that resistance level is embedded in supply. That may be your entry to the short side. Or you can wait for, like for example, say this high right here. Say it's a candle, okay? Like a candlestick like this. Let's just pretend it's here. This candle can have a body like this, and you can simply say, okay, my entry is going to be at the open of this candle. Let's just say this is a green candle. My entry to the downside for puts will be at the open of this candle, and my stop will be at the close of this candle. Or your entry can be here, your stop can be here. It just really depends on what you want to trade, whether you want to trade a technical stop or entry, or whether, and this is still technical, but it's you're eyeballing it a little bit more because there may not be enough historical data on this candle to warrant an entry like this resistance right here, okay? But these are still valid. You can just arbitrarily base your entry off this candle, like the open, the close, the low, the high. It just really depends on you, okay? But what you want to see, the most important thing you want to see when price enters the supply zone is you want to be making lower highs, okay? Because that just shows weakness on the buyers, and it just shows that sellers are responsive here, okay? And by the same token, we can, let me just get rid of this. We can go ahead and, let me just get this pen. We can go ahead and have a demand zone right here. And same thing, okay? When price approaches this region, if there are buyers here, they will push price in the opposite direction. Say another instance, price gets in this region, just fiddles around. Let me just draw that a little better. So say price actually makes a deep run into this zone. Suddenly you have buyers being responsive. They push price back up. Sellers try again. They make a higher low, and we keep seeing this price action right here, okay? It's basically the opposite of what we saw in the supply zone, okay? You want to see higher lows being made because, again, sellers are trying to drive price. They're trying to make new lows. But if buyers are responsive, you're going to get a low here, a higher low, and that just shows you that sellers are weak and buyers are responsive, and they think that this is a good opportunity for them to get long. They are preventing the sellers from making new lows, and instead we're making new higher lows, which in my eyes is very bullish. And again, ideally you would like to have some levels in here that may give you like a visual indication of where to take a long position, play calls. You may want you may want support here, like previous historical support, or again, you can play just simply based off candle formations. Doesn't matter what color the candle is. You can base your entry off here and then make your stop here. It really depends on what you're comfortable with. I usually prefer to play technical levels like these, but when I do not find any, I usually just resort to simple arbitrary candle entries and exits, okay? So, what you want to see here, again, is the opposite of what we saw in supply. You want to see price make higher lows when they're in this demand zone for you to take a long position, okay? Let me see if I can show you guys on this QQQ chart what I'm talking about, okay? Alright, so, and let me just do this real quick. Okay, cool. Alright, so right here we have a 1 hour from this day, and we're going to focus in on this action, okay, because this happened on 11:30, okay, and then this following day, December 1st, we're going to see how price, after this gap up, reacted to this 1 hour supply zone, okay? So I'm going to turn on extended hours just so you guys can see how price was behaving here at the open the following day, okay? So 30, 29, 30, okay, cool. Okay. Alright, so here we go. So here, and like after this day closed, we have price rallying to the upside. Here, we've already made a fresh supply zone, and we've also got this huge psych number here, 400, okay? So we can see that in the past, it's already failed at this price once, twice. And then right here, you can count this, let's just say 3 times, okay? And then here, this is the 4th time where it fails. So here, you just see price go into this 1 hour zone over once the pre-market, in the after hours and the pre-market, and you just see price just fiddle around here. What is this, 8 a.m. to like an hour and 30 into the open, you see price attempt to get over this, but it just simply fails. And then right here, you could have played this 2 ways. You could have, once you saw price reject this 400 level, you could have easily played puts to the downside, or just based off that cycle, that technical level, that 400 level, or you could have played it. Let me see if I can get a smaller time frame just so you guys can see a little bit better. Time frame. Day. Let's do 90. Let's do 15. Okay. 11:30. Yeah. So yeah, so this is a much better image. So right here, so here again, we are in this 1 hour zone. We are at this 400 level. And as soon as you see price rally into 400, you get this, I guess you could consider this a morning star. Not a morning star, but I forget what the name of it. I think it's a gravestone doji, maybe an inverted gravestone doji. But basically, you just see price rally up. You see this small red candle with a little wick to the upside that's bigger than the one to the downside. And that just tells me like that sellers are responsive here. Price is dying here. And also, just notice this volume drop. So you have this rally to the upside, but you also have decreasing volume. Once we get to this little apex, that's when price starts decreasing. Again, had you seen this in real time, you could have easily played puts once this got below 400 and held, like for example, like at this candle right here, or you could have simply played it off these candles. Like for example, this one, you could have entered. Like if you like to keep your stops tight, you could have taken your entry here, and your stop could have been here at the open, or the high of this candle. In either case, you would have been rewarded very nicely for this candle, because even if you get stopped out, you can always enter upon further rejection. Like when you see, like upon further confirmation, when you see price rejecting the 400 level here, it repeatedly rejects it. And also look at this, you're also making lower highs in supply. That's what you want to see when you are trying to play short puts to the downside. Okay, there's also this month was really good, so let me just see if I can zoom out a little bit. Where is it? Okay, so there, let's just skip forward a little bit to 12.8. We have this supply zone here, and we have several instances in which we touched it. Okay, so let's just go through each one of those instances just to show you what we're talking about. Oh, my wrong one. And we just turn on the extended hours to show you what it would look like in the pre-market if you were looking at this zone. Okay. Alright, this one was really good. Okay, so same thing here, okay? We're just going to look at each individual instance in which price failed here, okay? So, again, rally to the upside, gap up overnight into supply. Keep in mind, this is 4 hour. We're just going to focus on this 4 hour that was formed, okay? So, right here, we have supply, once again, hitting here, bounces, not only off the 4 hour supply zone, the 1 hour that we also have, but also off this key 400 level, okay? So overnight, price develops, you're getting price for, there's like a slight angle, like a slight slope to the downside here, but what you want to see is towards the open, you want to see how price is reacting. You want to see how price is reacting to these critical levels when you start seeing volume pick up. So here at the open, we hit let me just go through here one more time. So here we hit 400 rejection. We attempt again, nothing. And then we make one last hurrah here, rejected. And after that, we start posting lower highs, okay? So I hope you guys can see this. Lower high. You have a high here, you have a lower high, and after that you just get immediate rejection at like 15 minutes before the open. You get this big red candle, and then at the open you make a low here, you make a high here, but this high does not even attempt to reach this 398.54 level, and it's just rejected after that. Oops, sorry. Let me see. Yeah, it's just rejected after that. It doesn't even touch it. Let me see if I can get in a little closer. Yeah. Oops, sorry. Yeah, so this one, there are two ways you could have played it. Because we can't play options during the pre-market, what you could have done in this instance is you could have either like waited for a retest of the 4 hour here or the 1 hour supply zone. You could have waited for, had price not just gone immediately down, you could have just waited for price to dip, bounce and then retest it. You could have entered at the 398.54 level or 398.81 level. Both are equally valid, but you just want to see price eventually trend down. And both of these would have been fine entries had you set your stop loss, like let's just say at 400, or perhaps the open of this candle, the open of this one, the open of this one. It really depends on you on where you want to place your stop and your entry. But in this case, since this one did not attempt to retest these levels at the open, you could have also just gone in at a whole number. Like for example, 398 here. You could have been watching the time and sales, the level 2, like in anticipation for the next 15-minute candle. This one right here. Like for example, the high of this one, 398. Had you been watching, like if you were to play this by whole numbers, if you were to play the 398 level, you'd have just waited for this price to settle and then the next candle open. You see that your highest point here is 398. You see that price is failing on the level 2 to get above it. You see the bids getting beaten down by the ask. And also, had you seen the time and sales, and you see price attempting to test that 398 level and just consistently fail, you could have easily played puts to the downside with 398 as your entry, and your stock could have been this 4 hour, this 1 hour, 399, 400, whatever you like, okay? And had you just held, like, gotten a good entry there, you could have just played easy price on the way down, okay? And then there's one more instance over here. Yeah. So I believe this is the 1 hour, this top one, yeah. Okay. All right. So this is the last of the 3 that we. Oh, actually, no, we have several more. Okay, one more. I'll show you guys what happens when price breaks after this one. So, so again, this other day attempts to test the 400 level. Pre-market, we're rallying up into it. Cool. We get into this 4, we get into this 1, and we actually managed to break above 400 momentarily. And we also have these dashed lines here, calls above, calls above. I usually place these dashed lines at the end of supply or demand zones, and that's simply to take a position to the upside, depending on whether it's calls above, or to the downside when it's puts below. Because normally when price breaks these levels, if these levels are get eaten through by price, the orders that are embedded in these levels are going to get filled, and price normally just keeps going in that direction once these levels are broken. However, if there is a lot of, say, overhead supply or overhead demand, or you're like at near a strong support or resistance level, oftentimes price will just fake you out. It'll get above these zones momentarily, and then it'll just drop, okay? And that's basically what happened here. So pre-market, again, we rally up, we rally into it, we break past this first zone. Okay, cool, we're above 400. And then we test the end of this 1 hour zone from over here. Where was it? From where we originally drew it, which was here. So this is the high, okay? And this is the highest point we've posted from here to here, okay? So just as we approach the open, price rejects here, okay? This was the highest point in almost a month, I think. Let me just double check that. What is that? 11:30. Actually, more like 2 weeks. Yeah, 2 weeks. Okay. So that was the highest point that we had posted, and right now it's acting as resistance, as is this the end of this demand zone. Okay, which is at 401.24. Once we reject this high, this previous high, and the end of this demand zone, we just start tumbling down once again. So we start going down, 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 and once again, this 398 level is respected right here, just moments before the open, and so is this 1 hour level. Okay, so there are several ways you could have played this. Yeah, upon seeing this action in the pre-market, you could have played this upon the retest or the rejection of this 4 hour level, or this 1 hour level, or this 400. But since that wasn't the case, since price just dropped after this happened, again, you could have played whole numbers. Your entry could have been 398, 397, depending on what you find a little bit more comfortable, what your risk tolerance is, or you could have played candles. But again, what you want to see in these zones are lower highs. That's basically what we're getting here. Okay, this is the point I'm trying to get at. You want to see the party that's pushing price in this direction into this zone lose strength over time. You want to see strength from the people who have these orders in here. You want to see price push this price. You want to see price get pushed in this direction if we are in a supply zone. If we are in a demand zone, you want to see price get pushed in the opposite direction. Okay, let me see. Yes, okay, so right now I remember this day I kept my 4 hour demand zone or supply zone intact, because normally when the way I see it is, if price is able to overcome these zones in the pre-market by a lot, I'll question that zone. I'll consider it questionable. However, if it only does it by if price only passes through these zones very briefly and with not a lot of strength into it, I will consider these zones somewhat relevant going forward. Okay, so right now I consider that 4 hour zone questionable. However, the 1 hour is still intact since price was rejected off of it. Okay, so what happens when price goes above these zones? So as we can see here, into the open on this day, price just on the first 15-minute candle, price just gets above the 4 hour zone that we had drawn in. Okay, so the 4 hour is from 398.54 to 419. Okay, so right off the bat, first 15 minutes, we can go ahead and remove that 4 hour. Okay, remove. And normally when price makes a move like that, where it makes a move into a zone and it acts as if the zone is not there, I usually like to play a small position here where that price point is, like for example 419. I like to take a small position to the long side just to test the water, see how price will react around it, whether buyers can continue pushing price up or whether it's just a fake out and we get pushed right back down. In this case, once we pass 419, the next 15-minute candle, we are able to base above it and we are able to open and close above it. That's what you want to see. You want to see price close above or below the zones depending on which direction you're playing, and you want to see continuation going over here. Okay, so, and we also have this 1 hour that where you got to think about these 15, 30, 40, 15, 30, 45, like this 45th minute here. We basically get above, so we open here, we close here, and we open above. That's what you want to see. You want to see these green candles or red candles, depending on which direction. You want to see them forming above or below these zones in order for you to take a proper entry. So here, you could have taken a small position here. Once you saw this candle close here and you saw this candle open here and hold, you could have added to your position and you could have been long up until this next one day zone at 403.38, and you could have easily used this zone as your exit had you wanted, or you could have played it by whole numbers. You could have played it off this, you could have played it off 403. It just really depends on what you're comfortable with. If you're not comfortable, if you think price action on that day is somewhat questionable and you don't think it may reach these zones, you can easily scale out at whole numbers or support and resistance that may be along the way if you are able to identify something like that. Okay, and I think there is, yes, here we go. So after that price action, we just see price once again rally into these supply zones. Like for example, this 405, this is from the beginning. This 405 gets rejected, lower highs. And let me just get this off here so you guys don't get confused. Remove. And keep in mind, we're this whole time we've been basically moving around this key 400 level, okay? So again, price here rallies into this demand zone right here, this one day, lower highs into the open. That just looks like weak price action, but and then later this day, that's basically what you see. You just see weak action, but it's sideways, it's choppy. You kind of want to avoid that. Where are we? Once again, here, price opens like it's just moving sideways for the most part in the after hours and the pre-market. Price goes here, hits this one day, lower highs. You could play this again, depending like on what you want. You could have used whole numbers. You could have entered at 403, 402, and made like say 400 your price target. Or you could have scaled along the way like at 450, 401.50, depends on what you like. And then one last example here. We hit the supply during the pre-market, lower highs, and look at that big drop. And here, basically what you want to see in demand is the opposite of what we just saw in supply. When price comes into demand, you want to see lower highs being made in order for you to take a long position. Again, your entry can be technically based off support or resistance, wherever we are, or it can be based off candle formations, whichever you prefer. But that's basically how I trade my supply and demand zones. If we, again, just so you guys can remember and review, ideally what you want to see is when price gets into supply, you want to see lower highs being made. When price gets into demand, you want to see higher lows being made in order for you to take a position. And that position can be based off, again, once again, technicals such as support and resistance or candlestick formations, okay? Let me see, what else do we have to go over? Let me see what questions you guys have. Okay. All right. So one of the questions is, if you could discuss the different time frames and show a few examples of how you draw the supply and demand zones and how often you redraw them. So the key thing I like to do is have my extended hours off, because in the previous video I explained how the pre-market will have low volume in like these tickers, and that volume is not normalized to like open market hours volume. So whatever candle formations you do find in the pre-market, they will be inflated simply because when there's lower volume, it's much easier to make big moves, small moves, but most likely big moves, you get really inflated candles, and that just may screw up your zones because those candles are based off very little volume, so there are not a lot of buyers or sellers in those candles, okay? So what you want to do is you want to turn off your extended hours when you're charting out equities, and then you want to work your way down from, I rarely do monthlies, but I usually do weeklies, dailies, 4 hours, 3 hours, 2 hours, 90 minutes, 1 minute. That's usually the routine I take. I go from the highest time frame that I can to the lowest, just so I don't skip out on anything that is there in the chart. Because if you do skip out, say like you skip out a demand zone, a 2 hour demand zone, you're targeting, let's just say this demand zone is right here. Oops, sorry. Let's just say this demand zone is right here. Price is coming, and you think, let's just say there's a technical right here. Like say this is a whole number right here. You take an entry here, and let's just actually make this a little bit more alright, there we go. Okay, so let's just say this is a technical right here. Price, it gets below that, you take an entry, you take a really big position. There's a 2 hour you did not chart out here. You're aiming for this 4 hour down here. What happens if price hits this and bounces? And you have a really large position going into this, you're more than likely going to get freaked out, because if you're not comfortable playing with a large position, or if you just see your entry suddenly reverse on you, that's when emotions start playing games with you. You may either exit the position prematurely, take a big loss, and be tilted, and be scared of not taking a re-entry again once we test this 2 hour that you did not chart out. And then you see price eventually come down past this 2 hour, and then you see price going without you. What's the most likely scenario that's going to happen for you? You're probably going to FOMO into this trade. You're going to buy here, and who knows, maybe there's a 3 hour here and you didn't see it, and then before you know it, price reverses on you and you're even more negative than you originally were. So what you want to do is you want to try to chart out as many zones as you can see with your eyes, just so you don't have that happen to you, just so you don't get faked out, or like you're just left wondering, why is my position red as soon as I took it. You want to see what potential price targets there are for you. You want to see what potential entries, what exits there are for you, and that's what supply and demand zones offer you. So again, that's why I like working my way down from the weekly to the hourly, because by doing that, I avoid missing out on potential zones that may be important and that may psych me out of my position. If you're not if you're trying to do not very little, but if you're trying to save some time, what I would recommend would be just using the 4 hour, the 2 hour, and the 1 hour. Those will work really well, like within a weekly time frame, as in say Monday through Friday. If you have data from Monday through Friday, those will be very respected and very powerful if you're on a crunch, or if like you really can't afford to like draw out the rest of these zones. Okay, so if you're looking for like a easy time frame, it would be the 4, the 2, and the 1. Those are, you find virtually anywhere, like within a weekly basis. Okay. Also, whenever price tends to cross my zones, like we saw on the NASDAQ here, like we had a 1 hour and a 4 hour. Whenever price definitively crosses them with volume at the open, once the market is open, I will invalidate those zones and then just go ahead and redraw them. Once they are invalidated, I don't really look at them because price has already gone through, and I just try to focus on the more recent zones that there are. Like for example, there's a 4 here, there's a 4 here, one could argue this is a 4. I would not use this 4 or the 1 hour that I previously used, because price already crossed through them right here. Okay. Let's see. Difference between supply and demand versus support and resistance. So the way I see it is, like I explained in the first video, supply and demand zones are basically regions where there are unfilled limit orders that never got filled once price took off in one direction or the other. Like for example, here there's probably sell orders that never got filled once price just plummeted, and if price were to retouch or like tag this region again, those sell orders would get filled and price would continue to be driven down. Okay, so basically they're just unfilled orders in a particular region. For support and resistance, that's more of a psychological thing. Like for example, like this 400 level, we could consider it resistance for the most part, but and that's simply because we see at several instances, like over time, we see failure of price to get over this, and that can be simply because we also had supply here, which it coincided with, but also people are looking at this and thinking to themselves, a lot of people are looking at this 400 level. A lot of people probably think that this is resistance the way I see it right now. So if I take a short position, I have a higher likelihood of me benefiting from shorting this than going long on this, because a lot of other people are probably going to be thinking the same thing, short it. So just having that group think, or that bias when price approaches, say, resistance or support, will oftentimes become a self-realization, as in, if enough people think that a level is key or critical, oftentimes it will be, because they make it so. It, like, for example, like these may not be based off valuations or like fundamentals or anything like that. These zones, they're more of a, people give these value, or these numbers of value. So whenever we approach these levels, it's not because of anything that has to do with the company. It's more of a human behavior thing. They see 400, they get scared, they short, or they close their position, they sell, and price drops when it reaches 400. Or people short here and price drops, okay? So it's more of a, for support and resistance, it's more of a psychological thing, as in people are seeing these levels and they're assigning a certain value to these levels, okay? And oftentimes, you will find support embedded within demand zones and supply with resistance levels, and that's simply because whenever like, again, let me just clear this 1 second. Just so you guys can see. So if you guys remember from the last video, how we get demand is through a rally-based rally or a drop-based rally. For supply, a drop-based drop or a rally-based drop. Okay, so when you get these zones of consolidation right here, where price is just moving sideways, oftentimes you're gonna find that there's a certain number in here that is respected by everyone, because price is just moving sideways. And over time, you're going to have these demand zones or supply zones stretch, or just like continue going further into time. And you're going to see once price hits them, it's going to bounce. And that's simply because these are demand zones, but also because you had a lot of price just moving sideways, you're going to have an average price in here that may be support. Or in this case, supply right here. Price is going to come here, it's going to smack it and then get bounced off. And that's because we have these supply zones, but also because of this sideways action from both of these price formations. You're going to have price average a certain value here, and that's going to give you resistance. Okay? I hope that made sense, because normally you will find support and resistance within these zones, and if you can find it, those make for really great entries or potential exits depending on which way you're playing it. Okay, let me see. Oh yeah, there was a volume profile. Let me see if not this one, because these are not fresh. These I still have to redraw this for later, or for tomorrow. Let me just see Google. So this person is asking whether I use the volume profile alongside these zones, and the answer is yes. So the way I like to use the volume profile is basically whenever you have these nodes, like for example these, let's just, for simplicity's sake, let's just call these peaks and valleys. Okay, these peaks are going to be you're going to have where there's a lot of volume traded around this price, and these valleys are going to be where there's not a lot of volume traded within these prices, and that's simply because of overnight gap ups. Like I said, it's much easier to jack up price when there is low volume. So here, like for example, like right here, we have a gap, we have low volume, and here again low volume, and that's just simply because of price movement being really fast. Okay, so the way I like to use the volume profile in conjunction with the supply and demand zones is I like to check where the zone may end or it may start depending on which way I'm going to play this. Like for example, Google here, in this volume profile on this 4 hour, we have this point of control here, which is basically where you find the most amount or the most shares traded or the most volume. Okay, so that would be like around this region right here, and right below this, I just want you guys to pretend like as if this volume profile or this point of control is not here, this gap right here. I just want you guys to try and visualize this peak right here. Okay, once we are able to get like above or below this peak, we're gonna have these valleys. Okay, this one right here and this one right here. If we are able to get into a price region in which we are also within these valleys, in the past these have been some of my most profitable trades, and that's simply because these regions or where this price is, like this gap in price right here from 2707 to 2647, you just see declining volume, and that's simply because there is a peak here and because of previous price action where there was not a lot of volume here. So whenever these valleys get filled, like whenever, let's just say prices coming from up here and you have movement of price to the upside, this price is going to get filled so fast because there's very little volume here. Conversely, if you take a short position here, like after this big peak, and you see that you're approaching a valley, oftentimes these will be much easier to play because whenever you have a valley like this, this price region is going to get filled so quickly. And it's worked so well for me in the past that oftentimes, like before, like after I finish my supply and demand zones charting, whatever I am doing, I usually pull up the volume profile and see if there are any valleys that are potentially in play, but also peaks. Because say you want to play this to the, let's just say this is resistance here. Okay, we get below it, we try to retest it, and say this peak is still here. If price bounces off this demand zone and comes over here, since there is a lot of volume traded here, I will consider this as possible supply and just play this to the downside, and oftentimes that will work. But the way I usually like to use these volume profiles is by finding wherever these valleys are and seeing if my supply and demand zones coincide with it, and if they do, that just gives me a little bit more conviction to play to either the long side or the short side. Okay, so hopefully that was somewhat clear. Let me see if there are any other ones. Yeah, so one quick question. You draw supply and demand zones on multiple time frames, 1 hour, 2 hour, 4 hour, 1 day. Which one do we need to use? Ideally, you'd want to use all of them. But like I said, if you're on a time crunch, or like if you're just barely starting out and you just want to see how well they may work with whatever analysis you have already done, I would just recommend using the 4 hour, the 2 hour, and the 1 hour. But ideally, you would want to use weeklies, dailies, 4 hours, 3 hours, 2 hours, 90 minutes, 1 hour. These are mine, but you can, I know some other people that use like different time frames, and that's just personal preference. Let's see. One second. I think that should be it. Unless let me see if I can find something else. Okay. Yeah. Okay, so I think that should be it for now. Hopefully those explanations were clear. Let me just review one last time. So for supply, what you would want to see to take a short position would be higher lows being made in those supply zones, and those higher lows coinciding with possible resistance up there, so you can take your entry and then your stop. It could be at the end of that supply zone. It could be at a resistance that's above your entry, or it could be just off candlestick formations. And the opposite for demand zones. For demand zones, you want to see higher lows. You want to take an entry wherever there may be support, a whole number, candle formation you're choosing. And also, I think that should be it. So hopefully this clarified some things. This is usually how I trade off these zones. I usually try to look for those higher lows or lower highs, and if there is enough momentum, or if it looks like we are approaching like for example these valleys or some peaks, that will also influence my decision. I do see that some of the guys in the chat room are using other strategies like a 13 EMA and a 200 SMA. That is really good in conjunction with these zones, because these can only offer you so much. Because I think the most difficult aspect of supply and demand is not how to draw them, but how to take an entry, how to take an exit. Because the way I do it is just by whole numbers, resistance, support, or candle formations. But if you have like an extra visualization, like for example like a 13 EMA crossing a 200 at demand to the upside, that can be a really good confirmation. It just adds confirmation to whatever your call is. Like once you see that 13 cross that 200 in a demand zone, you can easily take that to the upside for calls, and vice versa. So just, you can use this as your main method, but I think it works really well when you supplement it with other strategies, because it just makes it easier for you to be confident in your calls, and not get scared out or like get tilted out of your position in case it does reverse on you. Because basically what you want to see, like in your trading strategies, you want to see multiple confirmations in order for you to take a position or exit a position. So hopefully this has helped some of you guys. It answers some questions. If you guys do have any other questions, just go ahead and drop them in the channel, and I'll try to answer as many as I can. Okay? Thank you guys for sticking around, and have a good night.